Hello traders, welcome to Easy Forex Strategy. In today's video I will teach you how to make sniper entries only with our insane entry trading strategy. If you watch the video till the end you will be able to make this kind of entries in the market. And this trading strategy also works in indices, cryptocurrency. So stay tuned because I will show you step by step throughout every example. And guys, this is very simple to understand. As a trader, the only thing that will improve you is to put more time on the chart by back testing a lot. If you are a beginner trader, this will also be helpful to build a trading strategy with it. So this video is for everyone who is willing to see price action in a different perspective. From the screen we can see that we have a bullish and a bearish engulfing candlestick patterns. But we will start by bullish engulfing candlestick to demonstrate on how to draw the demand zone, plus the rules of the entry strategy. The first step of this trading strategy is to find a bullish engulfing candlestick pattern. By doing so we will understand that there is some volume in the market. Then on the second step is that the bullish candle must have a lower low compared to the low of the bearish candle. From this example we can see that this bullish candlestick low is lower than the low of the previous bearish candlestick. You will understand why is this very important to get a sniper entry. The second step is to draw the demand zone on the bullish candle. We will draw the demand zone from the open of the bearish candle and to the low of the bullish candle. If this is the first time watching our videos, then you don't have to worry because I will teach you everything from this pattern. Then on the next step is to see at least one bearish candle going to the zone. And also guys, you need to see that the demand zone is touched with a wick or the body. Then it will make the zone to be valid. Another thing to point out is that price must not trade below this zone before confirming with a bullish candle. Even if price trade below the zone and close bullish, it will make the whole pattern to be invalidated. Now we can see that we have a bullish candle on the zone. Then this will be our confirmation. But because we want to sniper we won't enter on the close of the bullish candle. Even if price close like this is still valid because it shows that the market is rejecting that price level, and also we can see that the market has touched the demand zone. But now that we need to sniper entry, we need a level where we will enter in the market with low risk. Now we will use the low of the bearish candle into good use. The low will be our price area where we'll be expecting the market to come and touch it before going higher. The point of doing this is to reduce the risk on our trades. And guys, just because you are able to sniper entry, it doesn't mean that you have to risk a lot of money. Because the market will treat you badly. This is what we will be expecting the market to do after the confirmation candle. The one helpful thing when doing this is that you will always have a super small stop loss on every trade. And you can also build a trading plan towards it. Like for example, you can say that you only enter trades with only 4 pips stop loss only. In this way you will be able to calculate the risk properly. For the bearish side point of view is just the same thing but vice versa. Here we will also make sure that the high of the bearish candle is higher than the high of the bullish candle. And the high of the bullish candle will be our point of selling. Or where we will be expecting the market to reverse from. I want to cover something that I didn't mention in all of the videos on this channel. Here we can see that the market is just trending to the downside. But what if one of the bearish candles touch the zone? Like from this example we can see that one of the bearish candle touched the zone. So the next step is to wait for the market to show a bullish candle before a bearish candle close. Even if the market doesn't touch the zone again. As long as the market was touched before, we will still follow the same rules as before. Now we can see some bullish candles before we can expect another bearish candle confirmation. Now we can see that we have a confirmation candle. But we can also notice that selling from here will be very risky for us. Then we will try to reduce the risk as much as possible from this area by trying to sell on the bearish candles high here. Because we already know that we want to sniper entry this setup. We will put a sell limit order on the high of the bearish candle. Then we will just let the market do its things. Before we begin with some examples of the video, just know that this entry strategy doesn't have a lot of trading signals, but once we see it just try it bro because you might catch something huge. And this works in all time frame like the 1 minute, 5 minutes, even for scalping. And when I was doing my backtest I have found that it works better with euro-dollar, especially on the 30 minutes and 1 hour time frame. Even other pairs it does work too. It's not a full trading strategy without some set of rules we need to follow. Here we can see the rules that we need to follow on this trading strategy. You can also add yours, but on this video we are going to focus mainly on this trading plan. And if one of the requirements is not met, then it will make a setup to be invalidated. If the information on this video is not enough, then I suggest you to check other videos on this channel, which will also help you understand this video even more. I will also put a link to the videos in the description below. So the first step of this sniper entry, guys, is to draw the demand. And also verify that the zone you are drawing, the bullish candle, is the one with a lower low. On the second step is to see that the market is retracing back to the demand zone. And remember, guys, if the market closes with a bullish candle without touching the zone, then that means the setup is not ready to be traded. On the third step is to wait for the market to touch the zone first. Then also make sure that we have a bullish candle after the market has touched the zone. The market can either touch the zone with a bearish candle or the candle that confirms the volume to the upside. Then the last step is to put a horizontal line on the low of the bearish candle. This line will be our buy area after we have seen that the market has confirmed our buy. Then we will just put a buy limit order there and let the market come and trigger it or move without you. The aim is not to chase the market, but to have a small risk with high rewards. You will understand why the take profit is there from the next example. And yes, is possible to enter on the sniper and close on the sniper. From this example we can see that we have a 7 pip stop loss with a profit of 150 pips. So before I explain why the take profit is there, please consider supporting the channel by subscribing. And also follow us on Telegram channel where I share weekly and daily setups for free. And you also be able to contact me there. The awesome thing is that you will also get a free PDF after this video with more examples. The link is in the description below. From here I will explain why the take profit level was there at the first place. We will follow the same trading plan as before, but now on the bearish point of view. The first step is to find and draw the supply zone on our chart, which we can see it here. The second step is wait for the market to come to the zone. Also read what I write on the charts because it's very helpful in adding more information to you guys. Here on the third step is to let the market to touch the zone and close bearish. From here we can see that the zone was touched with a bullish candle, and then the next candle we can see that it closed bearish. This means that the momentum is to the downside after the market has touched the zone. We can also see that the market has broken structure here. Then this small example show how the market structure looks like in the bigger picture. Adding more value to our trade setups is very important, guys. So the fourth step is to put a horizontal line on the bullish candle's high, near the bearish engulfing candle. Then that will be our sell area. We will also put a sell limit order on that horizontal line. As a trader we have to reduce trading risk as much as we can. Patience and hard work will always pay off. But hard work in the right direction will pay off massively. As we can see, the market just tapped that level and dropped lower. Also, guys, just remember that this trading strategy is not to chase price action, but is to catch the low as much as we can. We buy very low and sell very high, guys. Even this example demonstrates that we don't have to trade everything that is moving. And we can see that price action never touched that level of entry in this trading setup. But I will show you one example at the end of the video to sniper entry even this setup. So watch the video till the end to understand this. Also comment below if you understand this with all the trading rules required of this trading strategy. The same trading plan that we have been using throughout the whole video, we will continue to use it even from here. And guys, we have to follow the trading plan to the T. As always, we will start by drawing our demand zone on the chart. The second step is to find a bearish candle before we can see a bullish confirmation candle. And from this example we can see that the bearish candle also touched the zone. Now we can see that also price touched the zone with a bullish candle, which is also a confirmation candle. This will give us an edge amongst other traders who will buy at the close of the bullish candle. On the last step we will put a horizontal line on the close of the bearish candle because we can see that the bearish candle doesn't have a low with a wick. And remember, this horizontal line will be used as an entry level point by using a buy limit order. Now look at the entry, guys. This is the smallest stop loss you will ever ask from anyone in trading. And for take profit in this kind of setups where you have previous highs, just target those highs because the market likes to target those highs with liquidity. Before we do this examples, I want to tell you guys that this is not a 100% winning rate. There is no percentage in any trading strategy because the market is always changing. which will also makes your results to be different unless if you are using a trading robot that is focusing on key market points. So from here guys I will show you how to buy from these two different areas and explain why one of them could be a bit stressful. By following all the rules of the trading strategy we came up with this. And also guys when you do your back test focus mainly on the rules because they will help you to identify or plan how you want to trade this accordingly. And we can see that this trade moved higher but it dropped lower after that, but I guess you will be in break even before the bearish trend here has started. But for those traders who enter late, they won't have a chance to put their trades into break even. And also guys another thing as a trader you should know that once you enter trade, it will close in 3 different ways. 1. It will close with your stop loss being hit. 2. It will close on break even, meaning you won't be making any losses or profit from that trade. 3. You will close your trade with a profit. And lastly for those who don't use a stop loss, then I guess that subject will be for another day after they have blown their trading accounts. This strategy is so simple you will learn it fast. This last example is not part of the video, but if you watch the video in the description below you will see all of the patterns and explanation on each one of them. So I want to show that you can also sniper even using other patterns. I'll make a full video on only few patterns that will have only sniper entries in the future. From this example when I say it depends on the risk is that if you are focusing on only entering trades with 4 pips stop loss, then you can do it with this pattern if ever it comes when you are trading. And if there is not enough trading patterns of this video. On this example if you follow all the steps needed you will understand everything easily. And if you do the same thing that I have explained through the video, you also be able to understand the setup that I said you need to comment from. So guys I guess I will see you on Telegram with all of your questions. Stay safe and trade with a stop loss every time. And never increase your risk when the market is going in the direction you didn't anticipate.